Hi everyone, this is Carla from Cycle CPA, your landscaping accountant. And today I'm going to go over an important topic in regard to depreciation expense. We're going to go over how to track these assets and depreciation expense on QuickBooks Online, why we need to consider this when estimating, and then an example of an asset and how to calculate depreciation expense. So I'll be doing this on my computer, so let's get started. So here I am on QuickBooks Online in a sample company. So this is not like a real data or anything like that. But first, what is an asset? So an asset is any big purchase item over $1,000 that's going to benefit your company for more than a year. So some common assets in this industry are trucks, trailers, mowers, computers, anything in that nature. And depreciation expense is the reduction in the value of that asset with the passage of time due to normal wear and tear. Okay, so let's start off by creating the asset on QuickBooks Online. So you'll go to Accounting, Chart of Accounts, New, Account Type is Fixed Assets, Detail Type, Vehicle. I'm going to create a truck category. Right, and then you're going to save and close. Now we'll record the purchase of that truck. So you'll go to your journal entries, date of the purchase, let's say purchased it this year, the account that we made, truck 1, debit, because debits increase asset categories, and then let's say you had financed this truck through a loan. We'll add a new account for that loan. Account type, long-term liabilities, notes payable, for truck 1, right? Save and close, and then a credit to that liability account to increase it. Save and new. Okay, now you recorded that purchase. Now let's record the depreciation. Okay, so under GAAP rules, a truck, any vehicle is supposed to last you for 8 years on average. Machinery and equipment, 5 years, and so on. So for this truck purchase, we're going to calculate book depreciation, not tax. And the reason why we're calculating depreciation is because, yes, you bought your truck for $30,000 today, right? But each year, you're going to calculate the expense that you're taking on that truck, which is the depreciation expense, because it's not like you're using it up all in the first year. You know, there's wear and tear. You're using a little at a time over the 8 years. So that's where that logic comes into play. So we're going to do 30,000 divided by 8. And you're going to have $3,750 dollars of depreciation for that year, every year for the next 8 years. So you know that you need to cover this overhead costs when you are pricing out your jobs and stuff like that. You need to take the $3,750 for that year into consideration, because you want to make sure that you are getting that money back that you had invested, the $30,000. So now we're going to book this entry in for the year. So we're going to go to journal entries. And I know I had booked the truck that, like, I had purchased it on January 1st, 2021, but let's pretend we're at the end of the year now and we're booking depreciation expense. So change the date to 12/31/2021. Awesome. So now for our debit account, we're going to do depreciation expense. Here it is. The $37.50, as we spoke about, that's the amount we want to make sure that we're covering in that first year, so that way we're taking that into account. And then we're gonna credit accumulated depreciation. Oh, and I don't see that account here, so let me add it. Account type, fixed asset. Accumulated depreciation is a detail type. Save and close. Awesome, so that's how you're going to book your depreciation expense at the end of the year. Save and new. So now if we go to reports, and you go to the profit and loss section, if you scroll down here, you'll be able to see your depreciation expense for that year. So $3,750, right? And that comes off of your bottom line. So that's why we want to make sure that we're factoring this into our overhead costs when we are estimating, right? And if we pull up the report for balance sheet shows all of your assets and liabilities and equity accounts. And we'll be able to see the accumulated depreciation on here. And the accumulated depreciation account is just what it sounds like. It's the depreciation that you have booked for the upcoming years, right? So this year for accumulated, it'll only show $3,750, but it'll increase as you book each year. So there it is, and there's my asset for $30,000, and then my note payable for $30,000. And of course, you know, I did book depreciation for the year, so that was $37.50, right? But we can get more granular, and we do want to get more granular. So let's see what that is every month. So every month we have $312 of depreciation expense that we want to cover. So you know that for that month, whatever jobs that you're doing, that you want to factor in this item into your overhead costs. And just to circle back again, I know a lot of us are confident in estimating our direct costs, you know, that are payroll expenses, materials, and everything, and adding that into our estimating process. But we need to also think about our overhead, and especially about our depreciation expense, and making sure that that's factored in there. All right, so I hope you got a lot of value from this video. And if you have any questions about book depreciation versus tax depreciation, or just how to create these entries on your QuickBooks Online, feel free to reach out to me at carlap@cyclecpa.com, or you can give us a call at 838-384-0463. Have a nice day. Thank you.